Today, it's part one of a two-part conversation that we're going to spread between today's show and next week's show with three guests, all answering one question. If you had $50,000 to invest or deploy into your operation today, what would you do? That's the question.
I'm actually doing that right now, buying open heifers that I can upgrade. You know, like we talked about in the previous question, I can't find any land where I'm at, so I'm actually doing that in Kansas.
That's Zach Hopson out of East Texas. Also joining me will be Dallas Mount from Eastern Wyoming.
We're going to do water projects. So math that out next year, and then the year after, it'll pay that $50,000 back in about a little over 3 years.
And we'll also hear from Northern Wyoming rancher Paul Foster.
What is going to make our lives easier? We also have the mindset that we are borrowing this place from the next generation. So what's going to make their lives easier so they don't have to see some of the struggles that we did.
Three perspectives on the same question, and a conversation that leads us down a path of not only what matters most to their operations today, but also how they're thinking about the future of their ranch, their way of life, and the next generation. How would you invest $50,000 in your operation today? That's the question on today's episode of the Working Ranch Radio Show. You know, there's a lot of profitability in our ranching industry right now. So how do we deploy that profitability in such a way so that we're successful down the road? Hi, everyone. Justin Mills here, host of the Working Ranch Radio Show. Good to have you with us on our program today on a subject and a discussion that you're going to hear from a panel of three guests joining us. A little bit unique. We don't always do this, but as we answer this question, it's going to head us down some roads and some dialogue that I think is very helpful for all of us in the ranching industry, so that when we do see the market turn, if and when that happens, we're set up in such a way that we can be sustainable in the long run. So you're going to hear from three different guests, a great discussion. Next week, we're going to continue on in that conversation, not only just in answering and feathering out more of the details about the initial question of where would you deploy that $50,000, but also maybe some places that you wouldn't or shouldn't or be cautious about. In addition, I'm going to bring up some things that they didn't talk about, and I want to know why they didn't address those particular things. But nevertheless, today's show, a great conversation that I think will be very applicable to all of us here in the industry. Also later on, meteorologist Don Day will be joining us with our long-range weather outlook, and we're hoping that we'll start to see some moisture break free into some areas that has been in extreme drought situations. In fact, I just noticed in the email that I got this past week on our drought monitor that we've been in a drought situation since about the middle of February. Unfortunately, I wish that the Risk Management Agency also saw the same drought that we're experiencing, because didn't really see that in my range insurance. Nevertheless, that's another subject, and I digress a little bit on that. But stay with us. Meteorologist Don Day will be joining us towards the tail end of the program. So a great show in tap for you here today. Hey, the next issue of Working Ranch Magazine will soon be coming to your mailbox, and if you want to get on that subscription list, it's pretty simple. If you go to workingranchmag.com, you can get your subscription started today. Or also, if you just want to try it out, maybe you've never had the opportunity to take a look at an issue of Working Ranch Magazine. Simple way to do that. Go to your local tractor supply store, and you can grab one right up off the shelf right there. And in fact, they'll probably not only have the current issue, but maybe even some back issues as well that you can read. So check that out at your local tractor supply store. And a quick shout out to the Tractor Supply Store in Ashland, Ohio, the one in Auburn, California. How about in Bedford, Indiana, and in Bennington, Vermont? Hey, just real quick before we jump into the discussion with our panelists, I did want to mention this because in case you're listening here on the radio, you have to step out of the pickup or the vehicle for some reason or another. You can catch all of our shows by going to our podcast site at workingranchradio.com or any preferred podcast provider out there as well. Also, a new outlet that you can find not only our show, but a huge list of shows that pertain to agriculture. If you go to agroamerica.com, you can find not only our show, but several others as well. Check out any of those different ways you can do that. And by the way, leave us a ratings or a review. We appreciate that. That's not only helpful for us, but it's also helpful for other folks that are just now maybe finding the show and would find some value in some of the programs and the things we're talking about. Well, let's get into our subject here today and answering that question. How would you spend $50,000 in your ranching business? So to join us in our panel discussion here today, we've got three guests from different parts of the country, so to speak. Joining us will be Zach Hopson. He is out of the Piney Wood region there out of East Texas. Dallas Mount, he's out of Wheatland, Wyoming. That is kind of in the central eastern part of Wyoming. And Paul Foster, he and his wife ranch east of Sheridan, Wyoming, kind of in the northern tier of Wyoming. They are our guests for our panel discussion here today. And guys, thanks for joining us here on the Working Ranch Radio Show.
Good to be with you, Justin.
Yeah, thank you.
All right. So as I approached you guys in an email, I know the question that we asked and we started out here with was, if you had $50,000, how would you spend it? How would you invest that into your operation, or how would you do that in light of where we're at currently? It's kind of a snapshot where we're at here today, but I know for all three of you guys, you've been in the ranching business for some time. So you've weathered the goods and the bads of the ranching industry. So you kind of have that experience coming into that. And I want to ask you first, before we get started, to each of you, what would be kind of your biggest limitations that you deal with? Zach, I'm going to start with you because you're going to be the first one to answer the question. Dallas, you'll be next. And then Paul, I'll go to you. But we're going to start just with this question, kind of briefly answer it. We don't need too long of an answer. But in your operation, Zach, what do you feel are the biggest pressures or limitations that you're facing?
I've come from I don't have a very large land base. Most of my operation is on leased ground. I operate on about 13 or 14 leased properties across several counties surrounding Nacogdoches. And the biggest pressure on me is finding more leased ground or losing leased pasture, because it's cutthroat. I mean, it's like that all over the country, I'm assuming, but people are constantly trying to run in under you, trying to keep landowners happy. And sometimes it's not worth what the landowner wants you to do, because at the end of the day, it's a business and you have to make money. And yes, some people may want it to look like a golf course, but that's not feasible. Then you need to let that place go. So what's holding me back is more land, and finding leased pasture is just like finding a diamond in the rough. It's just about impossible around here.
All right.
So
Dallas, I'm going to go to you with the same question. For you, what's your biggest limitation?
Yeah, Justin, so I'll talk about our grazing business with you today. And my grazing business is kind of a side hustle for my main business. So, simplicity is really important to us. So just to describe what we do a little bit, we take in custom grazed cattle and we operate primarily on leased land. So our ranching operation is about a 5-month-a-year business where those animals come right about this time of year, mid to late May. And then we usually send them home by mid to October. And so it's pretty simple, small scale business that's kind of a side hustle to my main gig, which is running ranching for profit. So limitations, I would line up pretty well with Zach. Leased land, we own about 30% of the grazing land that we operate on. So we rely heavily on leased ground, and some of that's immediate neighbors that might have changing desires. This year I want to lease it, next year I don't. Some of it might be, landowners with other motivations than just ranching. So figuring out their motivations, matching those and putting it together. And then with this year, of course, weather variability is definitely front of mind. So that would be another one of our major challenges.
Yeah, for sure. All right, Paul, same question to you. Your operation, you can explain a little bit of what it is. I think that'll give a basis for what the pressures or the limitations you feel in your guys' operation there in northern, kind of on the Montana-Wyoming border that sits east of Sheridan, Wyoming. If folks are familiar with that, it's also east of the Bighorn Mountains as well, kind of between the Bighorn Mountains and the Black Hills of South Dakota.
Yeah. So a little bit about us. We headquartered here on a lease of my wife's parents' place. And we retain our calves and we purchase calves, background them. We have a heifer development as well. And when leases are available, we will turn out to grass. If not, we will sell them out of the lot. So with that, the biggest limitation for us is just like Zach and Dallas, the availability of leases, trying to find more grass. And also, we live in a very beautiful area, a very productive area too. And so everybody else kind of wants to live here. And so urbanization is starting to become an issue as well. Mm-hmm. We're 20 miles out but we were starting to feel it already. And so trying to obtain capital for land purchases is also right up there as well. The price per deeded acre makes it very tough for an animal to pay for it.
Yep.
At least in one generation, if not two. So.
Yeah. All right. So we've set kind of some baseline here for folks to a little bit learn about each of your guys' operation. And in this segment, Zach, we're going to start with you. And I want you to answer this question again. You guys are going to have more opportunity to, expand a little bit further in this. And as I told you before we started here, if one of you has a question for the other one, please feel free. We can sure do that. Zach, I want to start with you. And the main question is this. So everybody's going to have the same one. If you had $50,000 to invest or deploy into your operation today, where would it go?
I would currently, I'm actually doing that right now, buying open heifers that I can upgrade, something that I can upgrade. Young cows, light bred, open heifers. I'm staying away from stuff that's at the peak, like, heavy bred cows or pairs. Yes, you can sell a calf on them, but if you're going to give $5,500 for them, that's a lot of that wipes you out of your $50,000. You bought less than 10 head. I mean, it's hard to upgrade that. I want something I can upgrade. Like we talked about in the previous question, I can't find any land where I'm at. So I'm actually doing that in Kansas. We're buying Angus type heifers up there that we can breed and then sell as bred heifers this fall, something you can market and add value to. And if I'm doing that down here, it's the same thing. It's just a different type of heifer. It's a Brahman cross, an F1 tiger stripe or something like that. But I think you have to know your region and what people want, whether it's blacks or reds or what. But to me, I'm buying something that I can upgrade and sell this fall.
Mm-hmm. What kind of, if you don't mind me asking, and I'm going to probably be kind of nosy with some of your guys' questions or answers, I should say, but what kind of investment do you expect out of that, Zach? Return on investment do you expect?
Right now I'm shooting for at least 15% on the low end with the numbers that we've been running, but we're projecting into the 35% profit range with the numbers I've been running. And 15, that's still pretty good money for if I have them 5 months.
Is that 15% annualized, Zach, or is that 15%? What's the length of the trade on those animals? Or do you have them a year?
About 120 to 160 days, 180 days.
So are you making that 15% over that 180 days, or is that annualized?
No, that's not annualized. That's per turn.
Okay, so that'd be a lot more than that if it were annualized then. Yeah.
Yes, sir. But we're trying to stay away from, I'm trying to stay away from winter input cost.
Mm-hmm.
Because then, your profit percent goes way down when you figure you're getting something through the winter.
Zach, as you were identifying something you can upgrade, that was what you were saying. Of course, some of that is a limitation addressing, you're sort of addressing the limitation that you mentioned before because you have a limited land supply or land element. So, again, it's how do we turn that? So you're talking, as you had mentioned there in answering Dallas's question, 120 to 160 days. Have you identified the next turn yet at this point in the market?
I haven't. I start doing that when I'm about 30 to 45 days out, looking at what the next buy is, running the numbers and seeing what's out there. This past November, the numbers, what we did was bought steers, bought bull calves, upgraded them to steers, weaned them 45 days, and had a really good margin in those things. But that was just for a small window. The market run up happened and you couldn't buy back in. Right. So you just have to stay flexible and run the numbers and just be willing to pivot and buy what works. Don't get dead set on something and say, this is what I'm going to do. That's why running your numbers and calculations is so important.
Yeah. Very good. Okay, we're going to take a quick break here. We got two more guests that've got to answer this same question. Dallas Mount, Paul Foster will be the ones answering that question. Zach Hopson, also our guest here today joining us. We'll be back after this. Your pasture is under attack. Yeah, horn flies. They're wreaking havoc on your herd, dealing damage to your cattle's weight, and in turn, that does affect your bottom line. That's why you need a solution in your arsenal that can withstand an attack. Alticid IGR is the first and proven feed-through that is battle-tested as an effective hornfly management product, delivering the defense needed to keep your herd productive and your profit strong. Win the battle for your cattle. Learn more at alticidigr.com.
Imagine keeping your cattle exactly where you want them, while being able to tap into insights powered by a collar and an app. No Fence is the world's first virtual fencing system for grazing livestock. From the palm of your hand and delivered with GPS technology, you can set and move pasture boundaries, gain insight into grazing patterns, receive reduced animal activity alerts, and more. No wires, no posts, just empowered grazing that supports healthier land and your herd goals. 10,000 plus producers globally already trust No Fence. Explore the possibilities at nofence.com.
All right, Dallas, let's get into you now. The same question that I asked Zach just a moment ago. If you had $50,000 to invest or deploy in your operation today, where would it go?
We're going to do water projects, Justin. So,
Okay.
yeah, we've got, in fact, we're doing this. So there's one of the leases that we have. It's all live water. So mostly springs and, really small flowing creeks and then a few drinkers there. But they just don't flow very well. One of them probably does a half a gallon a minute, and you just can't put very large groups of cattle on there. So we're going to come in and put some storage tanks out there, collect that water, put it in a above ground gravity storage tanks, and then it'll flow to drinkers. The idea is that we can group the animals up, run larger groups of cattle, fewer herds, get better grazing distribution, and improve the land. So $50,000, we're not quite going to spend that this year on that project, but it'll come pretty close. Storage tanks, pipes, valves, drinkers. So the math on it, conservatively, I figure it'll add 20 cows next year, 50 cows every year after that, pretty conservatively, assuming we get rain, obviously. Since I'm a custom grazer, I'm working on some smaller margins right now than the folks that have owned cattle. So I'm running on about a $300 margin on those. So math that out next year. And then the year after, it'll pay that $50,000 back in about a little over 3 years, which works to about a 30% return on investment. But if again, we're going to be on a little bit less than 50. But it's due about that 30% return is what my numbers are telling me. The real benefits, I think, for us are we can improve the land, we can get better grazing distribution, we can simplify. The place is about an hour drive. It's pretty remote, about 40 miles of dirt road. So knowing that there's water there is worth a lot. Right. So, yeah. So those are some of the reasons why I'm doing it.
Mm-hmm. All right, Dallas, you kind of covered all the questions because I was going to getting ready to ask you what your ROI was. And Zach, you're laughing too, because you were going to nail him down on that too. I could tell, but he came in at the last minute there and swung it in there. 3-year payback on the $50,000 on the water project. Again, you're dealing with pretty narrow margins compared to the owners of the cattle. That makes sense where you're just grass and cattle on that. Dallas, I know you take in cattle. Do you do any of your own trading on cattle or for that short? I know you're just a short 5-month run, but do you invest any in your own cattle?
I have in the past. I haven't in the last several years. I've been really focused on RMC, and I felt like the simple I can keep the grazing business, that's worth a lot to me because it lets me spend my time on what's really turning the crank in my life, which is the grazing business is a small side hustle.
Okay. All right. All right, Zach or Paul, did any of you have a question for Dallas on his investment of $50,000 in a water project?
Yeah, I got one. Yeah. Are you doing this on the leased ground or on the deeded ground, Dallas?
This is going to be on leased ground. So the landowner, plan is I'm going to pay for it all. And then we're going to take a portion of the project and allocate that to future lease payments down the road. Okay. So it's going in the ground on somebody else's ranch. To help move it along, I just said, I'll pay for the project and let's take like a third of that project over the next few years and count that towards lease payments. And then it'll be theirs at the end of that 3-year period. It's a pretty secure lease. I've got a multi-year deal. I wouldn't do it on an annual lease if it was just a year-to-year thing.
Yeah, that's a good question, Paul, especially in light of all three of you saying one of your limitations was land and finding leases. Everybody's going to deal with that that's probably listening to the show in some form or fashion of dealing with leased land that needs infrastructure development, whether that's fencing, whether that's cross fencing, or whether that is water development, like you had mentioned, Dallas. That's probably going to be a pretty common scenario for a lot of folks that are listening. So interesting to hear that. And just real quick, I guess any recommendations or thoughts as far as dealing with the owners of the land on this kind of a capital improvement?
Yeah, I think I'm probably a little bit odd. I'd like to hear Paul's idea on what he might do on it, but I think a lot of people probably wouldn't spend that kind of money on somebody else's leased ground, at least without a long-term agreement. To me, I made the decision, instead of doing all the programs and the cost share, things like that, I really wanted to keep it simple. I really wanted to fast track it rather than trying to go through those programs. So that was part of the idea. What are your thoughts, Paul? I imagine you've done some similar things. How have you guys structured them?
Yeah, here on at headquarters, if you will, what we've done with my in-laws is just make addendums to leases to increase. That's about the easiest way to go about it. We pay for it, but then we just get an extension of the lease. When it's outside leases for yearlings and things like that, capital improvements have to be really discussed. And we don't feel comfortable doing anything less than 5 years. Yeah.
Mm-hmm.
So
makes sense.
Yeah.
And that even comes down to rebuilding an H brace. If it's a 1-year lease, they need to put in the H braces even. So
now we're getting into a whole nother episode we need to probably bring about, is dealing with lease negotiations. Very good. So yeah,
I agree. I think that could be a whole episode.
Yeah. Dallas, that was a good question. All right, Paul, let's go to you. Same question that I asked the other guys. If you have $50,000 to invest or deploy into your operation today, where would it go?
Pretty similar to Dallas, just capital improvements, something that's going to last over 15 years, depreciate 15 to 20 years. We dug in March about 21,000 feet of pipeline. The majority of that, by majority, 15,000 feet-ish of it was 3 decades old, 1.25 PVC. The glue joints were coming apart. We did extend that into a pasture that now has 2 water sources. In our grazing rotation on the mature cows, we try to do about 500 head on a section for about 12 to 13 days. We'll put up and tear down 6 miles of 1-strand poly every year to kind of keep them contained. And so water is huge for us. We're also on the east side, what has been known as summer country, but no longer, because we have drilled a well, and actually that just got cased yesterday, and 400 feet and 14 gallons a minute. So about this time next year, we're going to have a pipeline on that. And, the other thing I look at profit. My wife and I look at profit as what is going to make our lives easier. We also have the mindset that we are borrowing this place from the next generation. So what's going to make their lives easier, so they don't have to see some of the struggles that we did and my in-laws had. So we go in and we find a stretch of fence that is just the pits to go over every single year. It's the same whether you get snow or not. And we try to go in do the boundary lines first, and so we can go to a neighbor. If we made a profit in times like this, more than likely they made a profit, and so we can double that fence line. So that's where we spend it on the cow-calf enterprise. On the yearling side, it just goes back into the general fund to purchase them next year, especially with the percentage increase on having to buy these calves and the way feed costs are looking. So that's where we're at on it. On an ROI, I wish we could be as high as Dallas. We kind of just take it to the value of land, what you kind of see that anywhere from, say, 2 to 4%. We're not going to run any more cows, but what we're not going to do is have to buy as much hay. We'll be able to graze out for 30 days more, something to that extent. So
I'd say, Paul, too, as you talk about that, one of the things both you and Dallas mentioned about when you say I don't have to worry as much, does labor also come into that element, less labor? Because if you have to worry about it, means you're either having to put a man up there or always having to go check something. But if it's less worry, meaning that there's probably less labor involved in it as well.
Correct. Yeah. And that's where you take this profit, the way what prices are and what people are seeing, which is good. Invest in technology, invest in ranch checks. So then that way you can get a text message when you know what your storage is at every single day. And for my wife and I, that once we invested in a ranch check, it saved us 3 hours every day in the summer of running pipelines and checking storages. Maybe increase that computer program and learn how to do AI. Take that profit, go to Dallas's class, continue your education, invest in yourself.
Yeah, professional improvement is huge. It is. It absolutely is. All right, let's take a break here, guys. When we come back, the question I'm going to ask all of you is the same question in a way, and I don't expect necessarily a super long answer, but just a briefly. But let's move this back about 6 years ago. Would it change your answer? We're going to talk about that when we come up next. You know, managing your land takes the right tools to get the job done. And at Central UAS Technologies, they're helping ranchers explore what's possible with advanced drone solutions that are built for precision, efficiency, and real-world challenges, from targeted applications to hard-to-reach terrain. Their technology helps you reduce waste, improve coverage, and make smarter decisions across your operation. They're backed by over a decade of innovation. This isn't just a drone, folks. It's a complete aerial solution. Central UAS Technologies, versatility that saves. Learn more at centraluastechnologies.com.
Horn flies stressing your cattle? Make fly control one and done with Alticid IGR XRB. Alticid IGR XRB delivers season-long horn fly control from a single application bolus, providing up to 195 days of relief regardless of mineral consumption or location. It breaks the horn fly life cycle with no impact on beneficial insects, giving you flexible, consistent control. Learn more at cargillanimalnutrition.com/Alticid bolus.
Okay, my guest here today, Zach Hopson. He is out of the East Texas area, the Piney Wood region of East Texas there, Dallas Mountain. He's out of Wheatland, Wyoming. Paul Foster is out of east of Sheridan, Wyoming. And so that's kind of the areas that these guys run their particular operations out of. And when we went to break, guys, I said, I'm going to ask you kind of the same question, but we're going to move back about 6-7 years ago. And you know why I went back 6-7 years ago, right? I mean, the market's completely different than what we're dealing with now. And so, Zach, I want to start with you. And I don't know if it would necessarily change your answer or not, either all three of you. I don't know if it would change, but would it? Does the market being way softer, completely on the other side of it, and maybe still in a drought, would it have changed your answer, Zach?
This is a tough one here because 7 years ago my mindset was way different. I would say if I could tell myself one thing, it would be to go to RFP, and that's not just because Dallas is on this call, but my mindset changed so much after that because 7 years ago I was thinking I needed tractors, I needed balers, I needed all this equipment. So back then I would have bought a new tractor or something like that. Whereas with the proper education, you would learn that that's technically not the best purchase. So that's kind of, if I could go back, I would definitely invest in some education first because, man, just learning what you can learn at these schools and be around people that you're around after that kind of changed the trajectory of my operation. So it would have been a lot different for me back then versus now.
So let me rephrase the question. Would your answer be differently if the market was, if we were selling calves for $900 a piece versus $2,500 a piece in terms of what you're doing? No,
because I'm still shooting for the same margins. That heifer is just going to cost a lot less. Instead of giving $3,000 for, you're going to give $600 or $700 for, and then you can upgrade her and sell her in the fall as, an upgraded animal. So I would still shoot for the same thing. You're just giving less money and you're buying more of them, and your margin's still going to be there.
Mm-hmm. Mm-hmm. Dallas, I'm going to ask you the same question. And I would guess if we're selling calves for, a third of the price that we're selling them for now, to some extent, not quite, your grazing lease you're getting for taking in cattle isn't going to be at the market that it is right now today. Would it change your mind in terms of investing in infrastructure and a water development project?
Yeah, no, I don't think it would. Surprisingly, the margins haven't moved a whole lot on custom grazing. You haven't seen those run ups like you have in calf prices because the alternatives to custom grazing is to, put them in a yard or feed them. So you're gonna hit that ceiling pretty quick. So we really haven't seen much of a change in our margins, and part of that's self-inflicted, right? I've got some great clients that have been bringing me cattle for a long time, and I really like working with those people, and that's who I want to continue to work with. I do want to take the kind of the path that Zach took in answering it, though. I want to back up in my mind and in my business those number of years ago. And so at that time, this lease would have been a new lease for us. It would have been more year to year. They were trying us out. We were trying them out. No way would I have put that kind of money in infrastructure on a lease property at that point. What I did do about that number of years ago is I started hiring some help in the summer to help me do this rather than trying to juggle my other commitments with managing these leases. And I would have done that a lot sooner. I thought I was being frugal. I thought I was being smart and not hiring the help and just doing it myself. And man, that was such a difference, such a nice change in our business when we started hiring people. And one of the side benefits of that is, I've got young people from all different parts of the country that I get to spend the summer with, learning from them and them learning from us. And that's really been a blessing in our life to be able to share those things and gain from them as well. So I would have hired somebody. I would have taken that money and hired somebody.
Mm-hmm. All right, Paul, these two have both set a precedence of answering not only if we were to go back 6 or 7 years ago, but also if the market was different. And I like that because it does show it was sage advice that you offered, to saying, here, this was my mindset then versus here's my mindset now. So I like that. And so, Paul, I'm going to do the same thing for you. I'm going to ask you the same question, first of all, and you can answer it in whichever order, however you want to do this. But let's take, it's kind of a two-part question. Let's say the market's softer. We're selling calves for $900 a head versus $2,500 a head. Would your answer be any differently? And then, of course, the second part of that question would be, if we moved back 6 years ago, where was your mind at then? So in whichever order you want to answer those, go ahead.
Well, we took over this lease. It is a triple net lease from my in-laws. And so we did that in January of 2019. With that, we had to purchase all the cattle and the equipment. So our mindset at that point was paying off debt. Our head was above water, but just our eyeballs. So we took on a pretty good cut. And so trying to do these capital improvements really wasn't there at the time. And but when we would meet our obligations and there was some left over, we'd kind of look at what really needed to be fixed and have a priority list. I agree with Zach. It's all based on percentages, whether it's 2,500 or 900, it's still a percentage of your profit. Is the definition of it. It's income minus expenses equals profit, and that's all a percentage base. So we had so much that we would allocate every year to the capital improvements and meet our obligations.
Mm-hmm. Yeah. Okay, you threw out a term there real quick, and I don't want to go down too far down the road of talking leases, but but for the sake of just explaining things, triple net lease, explain that real quick.
So you pay the land, utilities, and the taxes. So essentially the landowner has no bills. Mm-hmm. So you pay a lease payment, you pay the taxes, we also pay the insurance and all the costs that go with the land. So
yep. Mom and dad just want to not have any bills, pretty much, right?
It's been working out very well. So
yeah. Okay, we're at a point here where we'll take a break because we got one more segment here today in this episode. And we still got one more episode where we're going to get into more things. Some of that more about what would you highly advise not to? I know you guys have touched on that a little bit, but when we come back, we're going to continue to expand a little bit more on our conversation. Leverage the cattle fly and insect control solution that refuses to be average. ProZap Protectus Pour-On Insecticide IGR. Now, this isn't your average pour-on. It's a triple active solution you can count on. An insect growth regulator, adulticide, and synergist, all working together to knock down profit-robbing insects that affect cattle health and your bottom line. Ready to use as a pour-on for season-long control of lice, which means less time in the chute and more time getting things done. For fewer treatments and less handling that pays in dividends, choose Protectus. Talk to your Neogen rep or order through your distributor today. Visit prozap.com for more information. All right, guys, as we start to wrap up this episode here today, there's still a lot we're going to talk about, but I want to kind of whet the appetite of maybe some more conversation that we're going to have in the following episode as we look at this. But one of the things that I thought as I took notes here and listening to you three give your answers back here, one of you was not like the other one, the other two, in terms of what you chose in that. And Zach, you talked about cattle, putting that investment back in cattle. Dallas and Paul, you both talked about infrastructure, capital improvements in that. And the thing that I come to as I look at that, and Dallas, you had mentioned here between the breaks that you do have kind of in your main business that you have with Ranch Management Consultants, you do have the ability to get a window into a lot of different operations across the country. And I think some of these answers, the variation that I see, Zach, I'm giving you a justification here in some ways because I think your operation setup is a little bit different than probably Dallas and definitely different than Paul's in ways. And so, Dallas, my question would be, as you look in the window of some of these other operations and that, the answers could change based upon really what's the availability. I asked what the limitations were earlier, but not only limitations is what's available for you out there. And that could vary some of the answers of where somebody would invest that $50,000, wouldn't it?
Oh, yeah. Oh, yeah. Change huge. So there's a enormously different, like I would think of it as a balance sheet position, right? If we could look at several different businesses and look at where they are from the balance sheet. And, you know, for some of your listeners that might be new to this, balance sheet, assets on one side, liabilities on the other. And then in those assets, we're going to look at like, where is the money? Is it in short-term assets? You know, your things that are turning over quickly, you know, stock or cattle would be an example of that. Is it in intermediate length of assets, which would be like breeding cows that we intend to keep for 5 years, or machinery, or is it in long-term assets like land, right? In a business that's sitting on $10 million of net worth, where $8 million of that is tied up in real estate, and the rest of it's, you know, in a little bit of machine and cows, and a very small amount in current assets, things that are producing cash flow every year. That's a very different business when you give them $50,000 to spend, right? Let's say you got a rancher that started ranching 5 years ago, right? And you look at their balance sheet, they probably don't have any land. If they do, it's a very small piece of it, or they owe a heck of a lot on it. Most of their assets are in things that are producing cash flow tomorrow, right? Or they should be there, right? Mm-hmm. Things that are producing cash flow quickly. So the way that business is going to deploy $50,000 is probably very different from the first, right? So it's kind of a fancy way of saying it depends. Mm-hmm. When I stepped back and just thought about of all the different ranching businesses I get to look at, what do I think would be some really good deployments of capital? And I made a short list. Is now the right time for me to throw those out? Yeah, go ahead. Justin?
Yeah, you bet.
Okay. Number one, hire someone. I mentioned for myself, that was a big deal in our grazing business, but I see a lot of ranchers that are so frugal and so I need to do everything myself kind of thinking, versus getting somebody in there to do some of the labor type stuff to free ourselves up for doing the higher value work to really create value in there. So that I put hire someone. These guys both mentioned it, but I couldn't go without mentioning it. Education, professional improvement. I mean, to me, that's oftentimes the greatest dollar spent in terms of return, because it's something you spend a day that you get to use the rest of your life, right? So it has that ongoing return. For a lot of ranching businesses, this is the one we're banging the drum on this year, is build working capital, right? There are so many of these ranching businesses that run on a shoestring thin working capital position. And essentially what I'm saying by that is, pay the tax on it, put it in the bank, and just give yourself some room to maneuver in years when you need that room to maneuver. So that'd be the working capital position. This one might surprise you that makes the list. Take a vacation. Sometimes getting away from it actually helps you have the headspace to be better at leading your business. And I see in ranching that, we often do that. Blow it on something stupid. And what I mean by that is a hobby. Okay. I see that we get so caught up in these ranching businesses that oftentimes we don't have an outlet outside of it. So, something that you enjoy doing that gets your mind away from it, and so airplanes obviously is my choice.
Yeah, I think somebody's trying to justify what they do on the side.
My wife might be listening to this, so I've got to justify it. Team roping could be the same thing, right? For the rest of you guys. And then the last one I have is an outside investment, something that's different. Like if we look at a balance sheet of a ranch, that, like especially a large ranch that's carrying a heck of a lot of maybe real estate assets or cows, when we have capital that is presented to us, there's an argument to diversifying that. Okay. And I'm not saying go buy yourself another business, right? I don't want you being the one getting the quarters out of the washing machines at the laundromat, right? But maybe have some other business that's like a turnkey thing that's not subjected to the same drought risk, market risk, those kind of things is what your main thing is, right? So that's my short list.
Mm-hmm.
Like a fence company.
Like Zach, is that speaking from experience there?
Yeah, I bought a commercial fence company last May with profits we've been making. It's been great. I mean, I've got a phenomenal set of crews, and it was an awesome buy. So.
Mm-hmm. I know you guys have questions for each other, and we may not get to it in this particular episode. We might have to push some of that because I want to expand. If you guys don't mind, I want to expand a little bit more conversation, if we can, on the 5 things, Dallas, that you just mentioned. I want you guys to offer some thoughts because I know you guys were kind of nodding some heads. Paul, I know you got some thoughts on some of this, and there's one thing that came to my mind that actually. There's 2 of them on that list that's been circling in my mind here as of late. But one of them was building working capital and feeling like, okay, I've got, there's some pretty good amount of revenue, that has been generated. Do I need to be putting that off in some sort of a under the mattress, so to speak, in something that's an interest gaining account though, and saving that for that rainy day. And that's something that's been in my mind. Paul, have you had anything along those lines in your mindset of that, or am I the only one thinking that?
No, absolutely. This can't last forever. So kind of what we have done, just like what Zach just said and what Dallas brought up, with our profits, we purchased a liquid feed dealership. So we're a Nutrilix dealer, which is based out of Billings. So we sell liquid feed in the wintertime and mineral year round and a lot of different supplements. It was to diversify with our profits, but at the same time, it is kind of our belief that if you cannot start controlling your inputs, where are you going to be in just the volatile markets of whether it's cattle or the feed that you're feeding? So that's kind of our bank account. That's our savings account really is looking at other businesses to purchase.
And that's, as you said that, Paul, it made me think about that. Maybe building working capital and outside investment is linked at the hip a little bit. Dallas, you're nodding your head. Zach, what do you think? I mean, is that, as you bought your fencing business, as an idea of, okay, it addresses what Dallas had said, that it's maybe not into the same issues that you might deal with in your ranching and your cattle side of your business, but you took that extra profit, you put it into another business of some sort. They're kind of linked at the hip in some ways, aren't they?
Yeah, I mean, it's kind of like Dallas said, something that the markets don't control your profits. You're setting your prices. We purchased the fence company. We purchased some commercial property last year. We've got a long-term goal for the commercial property. We're going to RV and boat storage on it. I'm probably going to build another. Emily and I have another business in mind, kind of a self-sufficient 24/7 access business that we're pitching to the bank right now. But that was our thoughts, was this market's not going to last forever. And instead of just putting, this extra cash in our pocket, why not buy some assets that when the market goes back down, those assets are still making us money. And the fence company I bought had been in business 40 years, best reputation in town, best reputation around, like phenomenal crews and everything. So I bought a reputation, and that made a huge difference because the work has just not stopped coming in, and it's been great. I mean, it was a huge learning curve, estimating, dealing with general contractors, and went from 1 employee to 9 or 8 now. 9 counting myself as in the business, but it was a big learning curve, but it was a phenomenal purchase for us as a family. And just diversifying. And we wouldn't have done that had we not had some insight as far as some business teachings and some stuff that Emily and I have done to try to improve ourselves.
Yeah. Okay, guys, as we get ready to close this episode, and of course, in the next episode, we've got a whole other segment of questions that we're going to get to, and I'll make sure we highlight that before we end here today of what all we're going to be talking about in the next episode. But Paul, one of the things you said at break was there was some correlation between what all of you guys chose to do with the $50,000, and I want you to expand on that a little bit.
I think that, from what I was hearing from Zach and Dallas, is that we're all taking this profit and improving what we have, and keeping a positive attitude in these positive times and not worrying about what we don't anymore. If that land is hard to acquire, whether it's lease or purchasing, improve what you have, be able to have a better ROI by running more numbers or buying less inputs to run those numbers, things like that.
Yeah. Well, guys, I think let's put a pause in our conversation here for today. And folks, for those of you listening, I would encourage you to join us on next week's show, because just as much as we went down the road of talking about where to spend a $50,000 infusion into your ranching operation, how you would deploy that or invest that, next week we're going to talk about just the opposite. Where are some things that you should be cautious about? And I think you're going to be surprised in some of that conversation, because for a lot of folks, you already probably have some assumptions where you would automatically not put that money, but you might be surprised that in some of the dialogue that we have between our three guests of where that particularly goes. In addition, I'm going to bring up an area that none of them addressed about deploying any money towards. I'm going to ask them why. And if you want to find out what that is about, well, to make sure, like I said, to tune in to next week's episode, where we're going to be answering those questions and a lot more great discussion with our three guests: Zach Hopson out of East Texas, Dallas Mount out of Wheatland, Wyoming, and Paul Foster out of Northern Wyoming. Now, as we head to break here, just some final comments that I want to throw in here a little bit that I think was something that we didn't really talk about here today, but as we look at one of the issues that's facing the agricultural industry, and that is passing on the family ranches or the family farms or the land asset down to the next generation in a healthy way that allows that generation, if they so choose to want to do that, to be productive, to be profitable. If they got to get split up, sometimes these ranches aren't big enough to be supporting multiple families. It was tough enough with one family, let alone now splitting it up between multiple owners now. So I think one of the things to maybe consider in this is we are going through a time where you maybe have a little bit more deployable cash reserves, is looking at ways that you can get your estate set up. If you're just getting started, maybe it's a matter of just getting a will put in place. If you're a family that's been in business for a while, it's getting it set up in some sort of a trust, if that works for you, or something that works so that it can be passed on to the next generation in a healthy way. And I think that's one of the things to consider in this. Not something we really talked about here today, but it's something that I think is really important, especially in light of the fact that we continue to see less and less family farms and ranches. And I think a lot of that, and some of that has to do with just the fact that the estates are not set up in a way that it makes for a healthy transition. Well, stay with us. When we come back, meteorologist Don Day is going to join us as he talks about this weather pattern that's starting to shake loose a little bit, and we're hoping, boy, fingers are crossed, to see some moisture into some of these areas that have been experiencing pretty extreme drought. We'll be back with a look at our long-range weather outlook after this.
Fascinated by our wild weather? Now you can learn, appreciate, and understand the weather in your own backyard with the new Tropo Rain Gauge. Having achieved the highest rating of any product reviewed by the weatherstationexperts.com, the Tropo boasts rugged durability, impeccable accuracy, and precision to the 100th of an inch. Visit measurerain.com to order a Tropo today and use code RAINDAY, that's RAINDAY, for free shipping and 10% off. Go to measurerain.com.
Today's long-range weather brought to you by long-range epernamectin. You know, success starts with healthy, thriving cattle. And with long-range epernamectin extended-release dewormer, you'll get 150 days of parasite protection in just one single dose. Bigger gains and stronger returns on sale day, and it all starts with long-range. Find out more at Long Range Dewormer, weather.com. And joining us now with a look at our long-range weather is meteorologist Don Day. And Don, we talked a little bit about it last week, and that we have seen our weather pattern kind of a month behind than maybe what was initially expected. A lot of it to the fact that we had a high over what you were calling kind of a Hopson high that's starting to evaporate ever so slowly, and some good probability we could start seeing some of the areas that have been very extreme drought situations now potentially getting a better look at some moisture possibilities.
Yeah, we're encouraged that things have changed enough to allow systems to move into some of the drought areas, especially here, at least in the short term, parts of the central and western United States. We are going to see a little bit less in the way of rain chances for the very dry areas of the southeast, but things are shifting around a little bit. You mentioned the Hudson Bay area. There's been a pattern up there that has persisted all winter, persisted well into spring, that has finally started to show signs of weakening and shifting around a little bit. And I like to use sports analogies sometimes. For anybody that's played basketball, you know how important spacing is, whether it's a 2-3 defense, a box and one, or whatever. You position yourself, and that allows different things to happen. And the weather works the same way. And with that system in Canada finally shifting, that allows room for systems to come off the Pacific and transit through different real estate than we've seen for a while. And that's going to bring parts of the Central Rockies and parts of the Central High Plains some pretty good chances for precipitation here over the next 5 to 7 days. And as we get to the end of May and look into early June, we see that pattern kind of continuing. So that is an encouraging sign, and let's just hope it ends up in everybody's rain gauge.
Mm-hmm. Yeah, and what was encouraging, of course, it kind of goes hand in hand with what you were talking about too. As we see temperatures lowering down, that's always a good sign that maybe some moisture is coming along with that. Not a guarantee, but that's definitely more probable for these same areas that you were talking about.
Yeah, I mean, there's a lot of cold air in Canada still. And in fact, we're going to see another snow event in part of the Rockies with this weather pattern change. And we are going to see across the nation some pretty big gyrations in temperatures. I mean, while the West gets cold, there's going to be a mini little heat wave for 2 or 3 days across the Northeast and parts of the Mid-Atlantic, only to see temperatures go right back down again. So you started by saying everything was kind of a month off. And that's really kind of where we're at as we get here into the third week of May. It's acting a little bit more like late April.
Mm-hmm. One of the things you talked about in listening to some of your week or so ago podcasts was the fact that some of the models that we see, the 3 different models that you're looking at, there was some similarity, but there was also quite a variance in those. You'd mentioned also now those kind of starting to line up a little bit. I mean, they're always going to have some variations, but maybe showing some signs that they're lining up a little bit more.
Yeah, as you look at the seasonal forecast, let's just take the next 60 days. The next 60 days is showing something of a trend change that's going to allow more in the way of moisture from the lower latitudes, meaning down south into Mexico, Central America, parts of the Pacific east of Hawaii, some of those air masses being able to come into the U.S. Now, you expect that as you get into the warm season, but with the developing El Nino, that kind of juices things up a little bit and does give the opportunity for higher humidity air to come in. And if that happens, that should translate into showers, thunderstorms, and it's not a drought signal. It's a signal that says, well, there should be enhanced precipitation chances. Now, that doesn't mean by any stretch of the imagination it erases the drought, but it is an encouraging sign.
Mm-hmm. Well, definitely looking at the drought monitor map, there is actually, I would say, a good 2/3 or more of the country that is in some sort of a drought situation. Of course, we have areas that are even D3, D4 type droughts, but good to visit with you, and we'll catch up with you next week.
Sounds good.
All right. And again, that was meteorologist Don Day with a look at our long-range weather. You can tune in each and every morning to his daily video podcast. There's a link by going to his website at dayweather.com. Today's long-range weather brought to you by Long Range Epidemectin. Hey, if you're listening via podcast, now is a good time to click the subscribe button, because next week, our panelists that joined us this week will be back as we continue to flesh out more on this conversation. Also, for those of you that were listening last week, we did a giveaway for some coasters. I'll tell you who the winner is on this next episode of the Working Ranch Radio Show. The Working Ranch Radio Show is a production of Working Ranch Magazine, branded #1 by America's Ranchers. I'm Justin Mills. Thanks for joining us, and until next time, keep your chin down and your mind in the middle. So long.